I'm seeing people get rich. I'm seeing people get filthy rich, right? Like,
You solve math, you get crypto. Boom, done.
okay.
Sounds like a nice marketing advertisement.
And I keep hearing about the blockchain, right? This fanciful thing that I am not like, when someone asks me what it is, I don't like to look stupid, so I will make something up.
So poor, man.
Wait.
5 out of 10. This is gonna be nice.
Let's
Let's go.
This is gonna be fun. This is gonna be fun. Hi, I'm Terry, and welcome to Crypto 1001 Nights, brought to you by Crypto Desk. So, I know nothing about crypto, absolutely zero, and my friend Omar here is an expert in crypto. And today, we're gonna talk, I'm gonna learn, and hopefully, I'm gonna be able to answer some questions at the end of this. So, Mr. Omar, when did crypto begin?
You're taking us back. I think people typically attribute it to back in 2008 when the Bitcoin white paper essentially was laid out. I guess maybe we start with the real question, which is what is crypto, before you start asking me.
Okay. See, here's the thing, yeah. From my point of view, crypto, as I understand it, is a form of currency, right?
True.
That's correct.
Very correct.
And I'm like every average Joe out there, right? I'm a traditionalist, right? I don't really indulge in crypto. I'm not invested in any crypto. I know the basics about it. Like when I say the basics, I mean the absolute basics about it. But I'll be honest, I don't really trust it in a way where I'll be like, okay, I'm putting my own money into it. So hopefully this podcast is going to change that.
I mean, yeah, it's a bit of I guess, a different topic of conversation. But the part that you mentioned specifically about trusting it is what makes it so powerful, but also what makes it so dangerous to a lot of people. So going back to what you described it as, it is, a currency, it is a digital currency, but the main idea behind it is that it's far from any centralization, meaning no banks, no governments, no regulations, none of that stuff, which in a way is good, but also you could see it as bad, right? The fact that there is no regulation means you skip a lot of steps. So instead of you having to go through a bank, which then typically goes through a central bank, which then kind of potentially maybe even goes to a federal bank. You go through a lot of processes to either get out, to take a loan, to send money to family abroad. Sometimes it even depends on where you're sending the money. Maybe the country is blacklisted. Maybe there are other issues involved. And so there are so many different hurdles when it comes to traditional finance. Crypto kind of moves away from all of that because all you need is just a person that's receiving on one end and a person that's sending on the other, and them understanding what they're sending to one another, right? So the idea is that you could go from point A to point B without having to go through all the centralization, which then in itself is a double-edged sword, because what that means is no one's watching over the money, which is typically why banks have a regulation, to avoid things like theft, money laundering, corruption, blah, 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 blah. So it is technically a double-edged sword, and I understand why people are afraid of it, but it is, in a way, I guess, the direct natural evolution of what finance is going to look like, because there is no justification whatsoever for you to hold your money with a centralized entity rather than just holding it yourself, like actually owning your money versus having to go to the bank to ask for your money. You've seen it in so many cases where a war breaks or there's riots somewhere, and every single time what happens? People panic, they go to the banks don't have the money because they've invested it somewhere and they're taking interest on it, et cetera, et cetera. That's how banks function. And so you're stuck with, well, I can't take my money out. I basically have no money. The bank is screwing me. That's usually the picture, right?
Usually.
But when you realistically look at crypto, the idea is to move away from that, where you essentially have the power and authority to store your own currency, your own asset, which is another topic of conversation, by the way, because moving away from centralized currencies means moving away from inflation. You could argue that crypto is still affected by inflation rates and hikes and spikes and things like that. But the idea is that it's not a paper, it's not a dollar, it's not a country, it's not something that is so tied to a specific entity performing well, as much as it's just a decentralized currency that is controlled and monitored and essentially traded by people. People like you and me are sitting on either side of the equation. And so that's what makes it so unique.
See, I get that. I get that perspective, right? I understand that. But from my perspective, like what you just said, right? You said it's a double-edged sword, right? Where I'm putting my money somewhere where I don't know what's going to happen to it, right? So why would I then invest in something that I find to be risky in this sense.
True. Thing is, it's not that you don't know what's going to happen with your money. If you have your money stored in a ledger, you know that your money's not going anywhere. It's almost like you taking cash out of the bank and hiding it under the pillow or the mattress or something. Like it's the exact same concept.
Let's back up a little bit, right?
Okay.
Because I want to understand this like every average Joe at home.
Yeah.
What is a ledger?
Okay, cool. Yeah, maybe I skipped.
You skipped a few steps there.
Yeah. I guess this is what we're trying to do in this show, right? Like explain everything. So a ledger essentially is just a cold wallet, which. Okay, let me take another step back. So for you to safely store your crypto, it needs to be in a wallet, right?
Yeah.
The thing is, if you have a hot wallet, which is essentially your, Chrome extension MetaMask, which is, the software version of a wallet where you store your money. So think like your bank app, whether you use Emirates MBD or whatever, like you have a bank app, right? That's where your money is technically stored.
Yeah.
That's how you do transactions, right?
Oh, okay.
So crypto is very similar, but if you have a hot wallet only, it sits in your computer, meaning if your computer gets hacked, you're technically vulnerable for that hacker to then send the money out of your wallet. Now, if you have a ledger, that's a physical device. It looks very similar to a USB. Essentially, what that does is it's almost like two-factor authentication, right? Like you need another level of security to verify that you want to transfer that crypto out of your wallet. Meaning if someone hacks your wallet, let's say they're in your Chrome browser, they're trying to send all your money away, your ledger will then essentially say, do you want to authenticate this transaction? And then you have to physically say yes or no. So that's kind of an added layer of security, I guess. So just to clarify that, maybe it's like a pop-up tip.
Oh yeah.
What is a ledger?
Okay, so let's get back to the topic. So when people are talking about crypto, right? I want to know what the origin story is. I want to understand where did it begin, how did it get so popular, and why are so many people into it? Because again, I get it, but at the same time, I'm like, I'm not really seeing money. I'm seeing people get rich. I'm seeing people get filthy rich, right? Like really, like the money is flowing, right? But I don't understand, okay, let's start from the beginning. How did it start?
So going back to, I guess, your initial question, the very first one was, when did all of this start? Back in, 2008 approximately, when the Bitcoin white paper was being laid out, and then 2009 when Bitcoin actually was launched. The idea, there's a lot of conspiracy around it and who the original person was, but Satoshi Nakamoto is essentially the person they attribute the creation of Bitcoin to.
Okay.
And Bitcoin was essentially the first cryptocurrency, right? So he wrote this white paper down explaining how it was going to be this decentralized currency that is going to live digitally and is going to be able to trade it back and forth and is going to be a hedge against inflation and all these different things, right? Now, the thing is, no one knows who Satoshi Nakamoto is. Like, that's just a random alias name, very common in the crypto world. And what that means is you don't really know the origin of Bitcoin. You don't know how much of Bitcoin does this person hold. You don't know where or what he's going to use the Bitcoin for. So there's a lot of speculation. But because of that initial white paper, because of that initial Bitcoin launch, that's what inspired a lot of other cryptocurrencies. So when you say crypto, it's not just Bitcoin. There's Ethereum, there's Solana, there's so many different tokens. And each of them, I guess let me explain it this way. The value in crypto, in each cryptocurrency, is not the currency itself as much as it's the infrastructure around the currency. Meaning, if I'll give you a very basic example. The US dollar is equal to 3.67 dirhams or whatever because of the value that the US dollar holds, right? Which is attributed to the value of the US itself and its economy and so on and so forth, right? Very similarly, the value of Ethereum is not the value of like buying just a basic token or anything like that. It's the value that the Ethereum network has because of the apps that are on it, because of the people that are using it, because of the transactions, the speed. All the things that are in the infrastructure essentially is what kind of is the underlying tech behind the value of the currency. So the more, putting it in a different light, the more valuable a project is, the more valuable the token is.
Okay.
So if Ethereum does really well, Ethereum's token goes up in value.
Okay.
If Ethereum does poorly, Ethereum's token goes down in value. And so it's kind of like you're basically, think of it as like, stocks. Like you have a stake in the Ethereum network. So it's almost like you're buying a piece of the internet. And should the internet grow, your money will go up. Should the internet decline, your money goes down. So that's the way we think of, cryptocurrency essentially. Like you're buying into projects. And so, whenever you're buying and investing into something, obviously this is not financial advice, but essentially you're always looking at the team behind the project. What are they building? What are the goals? What's the infrastructure like? Why does this even matter? Like there are so many different solutions. People think basics, you know, like NFTs and sure, yeah, sending money, et cetera, but there's so much more that happens, like data exchange, data storage, like there's so many use cases for crypto. And so just to go back, that was the origin story, but because of that, everything else transpired.
Okay. I think that makes sense. And again, you know, you talked a little bit about Bitcoin, about Ethereum, you know, some of the major coins, right? Yeah. Okay.
Sure.
Cool.
Yeah.
So when people are talking about Bitcoin, people are talking about Ethereum, they also talk about the blockchain. And I keep hearing about the blockchain, right? This fanciful thing that I am not like, when someone asks me what it is, I don't like to look stupid, so I will make something up, right? So I'm going to ask you.
Blocks and
exactly. It's like, it's on the internet. That's my level of expertise to that, right? But I want people back home as well to understand what the blockchain is, you know, so why don't you give me a brief rundown of what that looks like?
the blockchain is essentially the public almost register of all the transactions that happen in crypto, right? So meaning, if I was to send you $5 worth of crypto, that will forever be on the blockchain. Anyone can pull up that transaction. Anyone can see exactly how much money I spent you, when I sent it to you, what your address is when you received it, what the address I sent it from. So basically, it's almost like, which is funny because a lot of people think, you know, crypto, money laundering, blah, 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 you know, like it's not regulated. How can you control it? But in a funny way, it's like you can't actually see bank transfer records unless if you go to the bank and you ask for them specifically. And some banks will, you know, decline. They'll say it's our client's rights. We're not going to share that, blah, blah, blah. With crypto, it's so much transparency where you can literally see every single transaction on the blockchain. So the blockchain is where all of these essential transactions happen, right? So yeah, think of it as the internet, basically. Like the blockchain is the internet, and your address and my address are IP addresses on the internet, and me sending you something goes through the, you know, fiber optic cables as data gets transferred, goes to you on the other side. So it's a very simple analogy, I guess, in terms of just trying to understand what it is.
Okay.
And then I guess this is going off on a tangent, but if you start looking at, you know, how do you even get crypto? What's the point of the blockchain? Blah, blah, blah. That goes a bit deeper into mining, which is a topic on its own, essentially, which I think, you know, you might have questions on as well.
Yeah.
But essentially, you know, mining crypto is solving mathematical complex problems, right? And every time a computer solves that problem, it gets rewarded with a crypto token, regardless of what that is. It could be Bitcoin, it could be Ethereum, it could be whatever, right? And so the idea is, as you are constantly solving more and more and more problems, you're constantly almost mining more of the cryptocurrency until you reach the maximum supply that is available. And that idea of the maximum supply is what moves you away from inflation, because with banks, you could always just print more money. I mean, you've seen it more than anyone as well. Like the inflation problem is super serious. Like if a country just decides, well, let's print more cash, the currency goes down in value, and then obviously the more money you hold means less value. So it's a completely different problem. But with crypto, it's like, you know, the finite supply, and it's never going to go beyond that supply. It is impossible. It is programmed that it will not go beyond that supply. Therefore, holding a piece of it is like gold. You're holding a piece of gold. There's only so much gold in the world. You cannot make new gold. It's not going to be real gold, at least, right? Even if you artificially create gold for whatever reason. So it's the same concept, which is why it derives the same sense of value, I guess.
Okay. No, I understand that. Trust me, I'm from Zimbabwe, and inflation, it killed us. It killed us off.
1 trillion.
Yes. If you look,
notes,
I can show you a note right now that says $100 trillion. So I understand, you know, the value is because of the limited supply. Is that
safe,
like
safe? The infrastructure around it, the purpose behind it, and then the limited supply.
Okay, so now let's talk cash.
Yeah.
Right? Because for me, something I don't really get is, okay, I've done the crypto thing, I've bought the right coins, you know, my money is accruing. How am I getting my money? Because I'm 100% sure there are people who are watching this right now who would be like, okay, crypto, cool, I get it. Not really, they wouldn't get it, but they get it, right? And they're like, okay, how do I get my money out if I'm putting money in? Is it just virtual fake money that's just floating in the air? You know, how does it work?
I can almost guarantee you that's probably like everyone's favorite question, and probably one of the biggest concerns. And once you answer this question, a lot more people are more likely to get into crypto. So because it's peer-to-peer, it's super simple, super straightforward, right? Because crypto is between you and me. I'm sending you a token, you're sending me a token, whatever. It works exactly the same way with cashing out. So if I was to, let's say, hypothetically speaking, want to cash out $100 worth of a crypto token, whether that's Bitcoin, Ethereum, or whatever.
Yeah.
I have so many different ways of getting my cash. I could either ask you directly to transfer the money into my bank account.
Okay.
It's held in an escrow service, which basically means my crypto tokens are held somewhere else, typically in one of the escrow service providers, and the money is held there until we both verify that your transaction was done on the other side. So you've sent me the cash, right? That's one way. Another way, which a lot of people don't like it because it seems like it's drug dealing and you're meeting with a supplier or whatever. You could essentially just meet a person and get the cash in your hand, and then go ahead with the transaction, right?
Okay.
But then there's risks of you don't know the person on the other side, you don't want to share your identity, etc., etc. Totally understandable. It depends on the country you're in. There are even more creative ways. Like if you're in, I don't know, China or whatever, you could use WeChat. If you're in Taiwan, I think you could use Line, which is very similar to WeChat. You could get paid in whatever it is that the service you typically use. Like I think you could even get paid in the 7-Eleven. Like the 7-Eleven could literally give you the cash that you need in terms of the transaction, but it's all about peer-to-peer, right? The idea remains, there's no bank involved. Yes, there's a bank transfer, but the bank doesn't even know why the transfer is happening. I'm essentially just putting cash in your account and I'm getting the crypto in return. So it's not as hard as you think. It actually takes maybe 10 to 15 minutes max. I've done it like hundreds of times. You literally, it's as simple as like going in, WhatsApping the person, hey, I'm looking to sell X amount of this. Do you have cash on hand? Yes, I do. Okay, here's my bank account detail. Send, confirm. Yes, I've sent it. Done. You confirm. Money goes. Simple as that. Fastest transaction you'll ever do in your life. Almost as fast as any other thing that you could imagine. You going to the bank to actually withdraw cash, you adding someone as a beneficiary to send them money, it's the exact same process.
Okay. Again, for me, I have a lot more questions in this realm particularly, but we're going to save that for another time.
Shoot.
Another question I have. When people are talking about Web3, right?
Oof.
It looks like Minecraft. I don't understand it.
Okay, so it's not that hard to be fair. Web3 is essentially just the decentralized version of Web2, which is like the internet that we know, right? The social...
Back up.
Okay, cool.
What is Web2?
The internet that you own,
Okay,
like social media, Instagram, Facebook, Twitter, blah, blah, blah. Like that's Web2. That's where you are.
Okay.
Web3 is just the next step, which is essentially all of that, but decentralized. So not needing... you know the problems with social platforms, right? Like your data is held there. Someone's selling your data.
Yeah.
Someone's selling you ads. Like it's the privacy issue remains, and it's a big concern with a lot of of these platforms. With Web3, it's like you can actually step away from that because A, you don't need an email address. B, you don't need an address. It's funny. I'll tell you an example. Have you tried setting up a PayPal account?
Yes.
You know how many steps are involved in that? You need to put your address, your street, your apartment number, your PO box. It's like they know everything about you.
Yeah.
For security reasons, sure. But then, do you feel like you're safe? Do you feel like your data is private? Do you feel like you've kept yourself to the extent that you want to? No. With Web3 and so many, there's Web3 is very broad. There's Web3 gaming, there's Web3 finance, there's Web3 social media, etc. But with Web3 in general, the main idea is all of that decentralized. All of that without the need for Mark Zuckerberg in the middle, without the need for anyone to be an intermediary, middle person, someone that's holding your data and selling it to someone else, like moving away from all of that and essentially having the same experiences. So I could still use a messaging app and talk to you, but I don't need someone in the middle that is, monitoring the chats and sending them to offer me, whatever discount or whatever ad because I said, hey, Terry, I'm looking to buy chicken wings, and now all of a sudden I've got chicken wing ads all over my phone.
Yeah.
The idea of Web3 is just taking that extra step towards, you could argue freedom, but I would say just simply decentralization.
Okay.
Moving away from any centralized entities. And centralized entities doesn't just mean banks, it also means Facebook, for example.
Okay. No, I get that. And I get the data thing. I think one of the biggest things that, the world was facing was that a lot of data was being stolen. Like, for example, today I got a call from some random insurance company about, getting life insurance. And I'm like, how in the world did you get my information? So that I understand. That's fair. So back to, you talked about mining a little bit, right? So when I think of mining, I think of, people in a cave, getting out gold and coal. So I'm trying to think of it in that term, right? So I think a lot of people don't really understand the terminology you used was a little bit confusing for me, right? Because you talked about a computer, da. So could you paraphrase that for me?
Let's just go back. So when we say mining, it is technically the same act almost where you're mining a cryptocurrency, but the act is not the physical act of actually, removing earth or sand or whatever.
Yeah.
It's the act of solving mathematical problems, right? Like cryptography essentially, where let's say, just for the sake of the example, there's a computer right now and it needs to solve an equation. Let's say it's 1 + 1 = 2.
Yes.
If it gets it, if it gets the answer right, if it gets 2, this computer gets rewarded with X number of said token, right? Now let's say it's getting more complex. So it's 2 × 2 = 4. Maybe my computer didn't solve it in time, but this one did. This one's getting rewarded. And so it's almost like a network of these computers and mining rigs, essentially, that are trying to solve these equations to continue mining the currency until they reach the maximum finite supply. Once you reach that supply limit, you cannot mine any further. That's why it's rendered useless. I don't want to get into Ethereum and things like that because Ethereum is now moving away into proof of stake instead of proof of work. Long story. But the idea is this is essentially what people attribute to crypto having a negative impact on the environment. The fact that with Bitcoin specifically, you need a lot of computing power, which means you need a lot of powerful computers, which typically means you need a lot of electricity. And so people say, well, if you're going to run all this electricity, it means you're harming the environment, all these emissions, blah, 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 blah. All true. Now, with other crypto tokens, it's not necessarily the same. You could mine on a laptop. In the future, you're going to be able to mine on your phone. All you're going to need to mine is essentially just an internet connection. The idea is that just because of the original Bitcoin code and the way that it's programmed, that was the process of having to mine it, right? Like you needed such powerful PCs. But we're now looking at, there's so many tokens. There's Cadena, there's Ethereum, obviously previously before ETH 2.0, and all of them can be mined on your laptop. Like you could literally just, wire a few mining rigs, probably the size of like a CPU or whatever, maybe even smaller, and that helps you throughout the day. All you have to be is just connected to the internet, and that has to run on a power supply, and that's it.
Okay.
So that's mining at like its purest, like lowest level of explanation possible.
For understanding.
Essentially.
Okay.
Just math, right? You solve math, you get crypto. Boom, done.
Okay.
Sounds like a nice marketing advertisement. Solve math, get crypto. Math to earn. Anyways.
Math to earn.
Yeah.
That's how you get kids to do math. So here's another question. So you talked about tokens and coins. Are they the same thing?
Same thing.
Same thing.
Yeah.
Okay. So
just think of it as like gold coins. Like, yeah.
Okay.
Let's call it that.
Okay. So
this is one Ethereum token. But then the value of it is whatever Ethereum is worth at the time. So you can also hold a fraction of a token.
Okay.
That's important to understand. So it's like $1, right? You can have 25 cents. You can have 10 cents. You can have 50 cents, right? From the dollar. So similarly, you can have 0.1 ETH. You can have 0.5 ETH.
Okay.
You can have 20 ETH. So it's just an accumulation of the token at whatever fraction or value that is.
So, for example, I don't have to hold 1 ETH to
Nope.
be okay.
So people sometimes think like, oh my God, Bitcoin is now worth, I think it's like 19K at the moment. It's now worth 19K.
19K.
That's low. It was 69 at some point earlier this year.
Wow.
Yeah, but anyways, a lot of people think, oh my God, I need to have that much money to buy crypto. But no, you can hold like 0.01 Bitcoin if you want. The idea is once Bitcoin goes up in value, whatever your 0.01 is as a fraction will also go up in the same ratio. Right? So if Bitcoin does a 2x, multiplies by 2, whatever you hold multiplies by 2, regardless of how small or big that is. If you have 20 Bitcoins, or if you have 0.1, right? So yeah, I think that's another issue with a lot of people early on. They think the barrier is too high. I think another, just maybe I don't know if that comes to your mind, but another misinterpretation is the value of the coin itself being directly correlated with the value of the investment. So people think Bitcoin's worth 19K. It's clearly a better investment than Ethereum because it's only worth 1,500, right?
Yeah.
But that's not necessarily true because if you buy, let's say, Ethereum and it goes from 1.5 to 3, you've 2x'd. But for Bitcoin to do a 2x, you need to go from 19 to what's that? Quick math.
19 to 38?
There you go. Okay, cool. Yeah, I was just testing. So you needed to go to 38, which is technically a harder move up in terms of levels than 1.5 to 3. You know what I mean?
So it's
because a lot of charts involved and highs and lows. I'm not gonna bore you with that stuff now.
Yeah.
But I'm just letting you know another misinterpretation, another misconception is people think the higher the value of the token per token, the better the project. Whereas sometimes like some projects are worth like 10 cents. But that doesn't mean that it's a bad investment, for example.
Yeah, they're worth buying into.
Yep.
So if you were to give me a, let's say, recommendation, right? And let's not, and this is not financial advice, did you say? I
Not
love that
financial
line.
advice.
Everyone says that.
Not financial advice. Do your
Not
own
financial
research.
advice.
Do your
Okay.
own research.
So if you were to advise me to buy a coin, right, or to invest into crypto, you'd advise me to invest into smaller projects that are still picking up, or would you advise me to get into some of the bigger projects because they have more stability?
I would advise you to do as much research and understand what you're getting into, regardless of what it is you decide. Meaning, just because the project is small doesn't mean it's better, because it could be a small project that dies in 2 months. But also, just because the project is big doesn't mean it's better, because it could also not move at all. And if you invest in the meaning of wanting a return on your investment,
Yeah.
maybe it doesn't happen, right? Maybe the project doesn't move. Maybe it just moves sideways for many, many years, right? Maybe it goes up, maybe it goes down. You never know. So the idea is to invest in something you understand. I think that's what people struggle with in the beginning. I mean, I see it with stocks as well, but I always used to think of stocks in a sense where I know what I'm investing in. Because if I'm investing in Netflix, I use Netflix daily, right?
Yes, yes.
So I know what Netflix is like. I know if the company is doing well or not. I understand where the money is going. You should think very similarly about crypto. Like, whatever you're investing in, why? What does it do? What's the infrastructure? What is Ethereum? Why would you invest in Ethereum? What's Bitcoin? What does it do? What's Cardano? What does it do? What's Polkadot? What does it do? Like, there's so many different coins, and all of them have their own infrastructures. For me, the easiest thing, obviously, as a gamer myself, is looking at Web3 gaming, because I understand gaming. And when someone comes and tells me this coin is going to allow you to do transactions between gamers and esports tournaments, whatever, like, oh, nice, okay, I can buy into that. I understand what that does, right? This coin is going to allow you to store data on blah blah blah. Sure, I understand it. So similarly, I think find something that makes sense to you, do more research about it, find out the team behind it, what's their roadmap like, what's their goal. A lot of this stuff will almost start becoming very logical to you, where you start realizing, oh, okay, it's like investing in gold, essentially.
Okay, all right, fair enough.
Just gold and silver, and you understanding what each of them means. I mean, look beyond gold and silver. Like, people invest in, what is it? Wood? What was it called? Lumber? Lumber, there you go.
Yeah.
People invest in lumber because they know, like, okay, there's a shortage of lumber that's going to come up because of the season or whatever. So they know it's going to go up in value. They understand how lumber as a market works, blah, blah, blah. You need to treat it the exact same way. So if you're looking to invest, again, not financial advice, but if you're looking to invest, you should invest in what you understand, and don't just try to catch the wave. Oh, this coin's going up, let me buy it. 100%, you won't catch it in time.
Okay, fair enough. And I think, I could ask you 1,000 more questions about crypto, but, we want to make sure that we leave some meat on the bone for other episodes. So, having said that, obviously, I've learned quite a fair bit in this episode. I hope I've learned quite a fair bit in this episode. I hope you guys have learned something in this episode as well. And I want to kind of recap a little bit, right? So,
Ooh, this is going to be nice. Let's go.
This is going to be fun. It's going to be fun. But this is definitely something, we're going to try this.
Can I ask now?
Go ahead.
Oof.
Bring it on.
What is crypto?
Crypto is a digital currency, all right, that is on the blockchain that you can invest to, like a stock or like a bond, that can either accrue or not. Simplest terms.
Sure. Oh, this one's interesting. Who was the founder of Bitcoin? Do you remember that? I very quickly brushed
I remember what you said, that he was a ghost. Or he is a ghost.
Yeah.
So this man could be living right here in the UAE.
Some people thought it was Elon Musk for some time.
Elon Musk.
Pretty funny, yeah. It was random, super random.
But
he denied it.
You said he was Japanese?
I didn't say that.
You said he was Japanese?
The name was Japanese.
Okay. I heard
The
Japanese.
name is Satoshi Nakamoto. I never said he was Japanese.
You said it. Thank you.
Anyway, moving on. Go on.
Okay, we'll go on.
What's Web3?
Web3? So Web3 is a decentralized platform which allows
That's
you,
what I'm saying?
I don't know, decentralized, what do I call it?
What? You tell me.
I don't know.
I already answered these questions.
Okay, I'm just gonna go with what I know. So Web3 is, a tool that you can use that will not.
So poor, by the way.
Wait.
5 out of 10.
Wait. Let me you're gonna give me success now. You do not have to give away your data to use.
I mean, yeah, you could have literally just said decentralized. It's the decentralized version of the internet
That's what I
with
said.
all its social apps.
That's basically what I said.
That's basically what he said. Anyways, yeah, this was fun. Moving on.
Any more questions for me, or that's it?
No, I think that's it.
Okay,
you
cool.
did relatively well. Hopefully, the people at home do better.
Oh, wow, doubt it. Anyway, so that was the Crypto 1001 Nights podcast. Omar Ghanem, thank you so much for joining us today. It was an absolute pleasure. If you guys want to see more, check out our socials right there. I've always wanted to do this here, like do the thing where I do this, and then you see, wow. Okay, anyway, check it out. Check us out over there. All right, Omar G, it was an absolute pleasure, and we'll see you guys next time where we're going to talk more about stuff I don't know.
Wait. If they have any questions, can they ask in the comments?
Yes, if you have questions, ask in the comments. If you like the video, like the video. If you want to subscribe, subscribe. All right, guys, we'll see you soon.
You want to send some crypto?
Just to me. We'll see you soon. Take care. Peace.
See you guys. Peace.